Let's begin by looking at the biggest move of the day. That's Kenya Airways, which was up about 4 shillings to settle at 53.50. Do you see this particular stock keeping the momentum that we have seen lately? And what are you telling those who are in a buying mood?
Kenya Airways actually dazzled many analysts because of its performance. Looking at how its fundamentals were last year, many of us had actually dismissed it. But I think when you look at how the company came around to strategize and take advantage of how the African markets are behaving this time around. I mean, we're looking at World Cup 2010 in South Africa. We're looking at Angola 2010, which is ongoing at the moment, with the many routes by the airline down south. It's a positive strategy. However, can the rally be sustained in the long term? I think if I was an investor, I'd like to look at the key fundamentals first. Because I believe to some point our market is driven by human sentiment, and I think this is one of the reasons why the stock seems to be going up, because everyone is saying is I mean, World Cup is here, Angola 2010 is here, so there's a lot of emotion thinking into it instead of people looking actually at the fundamentals. So if I was going to buy KQ, I'd look at the fundamentals, I'd look at its strategy in terms of maintaining its market control, in terms of improving its fleet, in terms of management, in terms of its hedging on oil and things like that.
Kenya Commercial Bank equity seems to be also attracting quite a bit of interest, moving 7.7 million shares today. What is driving the performance of the financial sector, and especially in view of the last quarter results coming in soon?
The interesting thing about the two banks is one, when you're looking at Kenya, it's a key emerging market in East Africa, and many investors around the world actually, trooping down to Africa to position themselves on how they can actually be able to cash in on the World Cup. And I'm thinking with the positive sentiment that foreigners actually having these two particular stocks because of the strong fundamentals, 2, the regional expansion into the East African market, and 3, basically with the East African integration becoming a reality. The fundamentals seem to be actually working out very well for these two banks. So any investor who's able to understand the aspect of how they're working, the aspect of how the fundamentals are, and be able to, privy to information needed, they'd actually be able to have a positive outlook about the two stocks.
Okay, now CFC, Stanbic Financial Services, released a report projecting that the Kenyan economy will grow by about 4% this year. Do you think this is a level that is attainable, and what does this mean, in terms of the bullishness that we have seen and the bullish sentiments that we are seeing on the stock exchange?
The stock market is the heartbeat of any economy in any country, and the Nairobi Stock Exchange is the heartbeat of a Kenyan economy. However, I tend to disagree from my own research point of view with CFC Stanbic point of view that the economy will grow at 4%, given the fact that we had stagnation or basically negative growth last year, given how the world economy was, political instability in our country, and high inflation rate and weak economic fundamentals. This year our macroeconomic indicators haven't changed. The stimulus package that was promised by the government is actually yet to be implemented. The political instability that is actually being seen around because of the ongoing draft and constitutional issues is actually a cloud hanging over a lot of investment. We had drought last year. We've had a lot of flash floods and rain coming in. Unfortunately, we're never really prepared for either eventuality. So you're looking at these two issues, how it's actually going to be. So 4%, I highly doubt it, but at least there'll be some positive growth.